Perfect. Recording progress. Okay. Welcome to tonight's session. Today is basically a Tuesday. It's the 4th of July. And if you're watching from YouTube, please make sure you subscribe to the channel and you do like the video because it's very important for you to like the video. Otherwise, welcome guys. Hope you're good. I hope you guys are good. I've been well. I've been slowly recovery, but I'm good. I'm good. Yeah, so I think the first thing we wanted to discuss before we dive into, because our main purpose was in terms of was wanted to focus on maybe distracted, whether it's an audio. Oh, I need to close some application. Okay, let me just try and I think let me mute all. Have some of that. Okay, perfect. Now my sound is good. Okay, welcome Tola, welcome Sitle. All right. Okay. Perfect. Perfect. I think one is trying to join in. Well, I think tonight's session, first thing we wanted to discuss. Remember, we are diving deep into talking about trading plans. The reason we are diving deep into trading plan is because we are saying trading is a business and trading is also an investment. So if you're an investor, you're gonna need to have a plan. Okay. Just sharing this. So obviously these are my contact details. Instagram is Mr. President Wonga. Twitter, Mr. Prez Wonga 7. That's my number. WhatsApp, or that's my email if you wanna get in touch for email. Okay. Thank you very much for yes, well, always well. I'm very much happy, very much excited. And then this is basically our focus tonight. We talk about the entry signal. Where are you going to enter? We talk about setting your profit targets, also determine the risk reward ratio and quantify price action risk and setting. Okay, this is basically this is a technical side of it. Okay, technical side of a trading plan. It means, okay, firstly, we said we're going to be focusing on, oh, welcome, good man in the house. Thank.
Hola, hola, Bao.
Yeah, that's good. That's good. Okay, okay. Okay, let me do this. Let me mute
¿Eh?
so that let me just mute everyone so we can just have one sound. Then what I will do is we'll take question later on. Okay. I'm just gonna do a session for about 20 minutes and then you take question in the last 10 minutes. Okay. The entry signal when you know when you should enter a trade and also how to set your profit target and determine your risk reward ratio and quantifying your price action risk, setting a position size, meaning your lot size, also setting your stop loss and setting a trade stop loss, and obviously respect a first exit signal with lose, win only lose. That's very much important, okay? And then those are some of the things we're going to discuss. And I think with the whiteboard, okay, Tabiso is trying to join. Let me just do this. Yeah, admit. Almost said remove. Okay, the reason. Okay, so the important part is we did speak about the why. Why? Why are you trading? That was the first thing. Now we're gonna talk about the how. How do you manage or how do you grow your account to make sure you achieve your why? Okay. So we're going to talk about the steps, the process, what you need to do. We talk about implementing the plan that you have. And then the what, when you talk about what, we are talking about the results now. Okay. So we talk about what, we talk about the results. Okay. When you say why, I'm doing this because I want to do this, I want to retire, I want to make an income. Okay. The how part is how you're gonna do it. How you're gonna do it obviously is through one of the way you're gonna achieve some of your goals that are financial is obviously gonna be through trading. So the how part is gonna be a technical part of it, and then the what is gonna be the results. Okay. Let's just do this because remember I promised we're gonna talk about the cash flow quadrant. The reason we're talking about this is mainly because it's very important. Oh, what happened? Okay, okay. This picture. This picture. It just failed on me. Okay. I had it, and okay, let's just stay here. Okay. So the reason we wanted to discuss the cash flow quadrant is mainly because I wanted to share with everyone on the group that it's very much important that we okay, it's not valid. Can we just share that? Okay. What happened to that picture? It just disappeared on me. Okay, so the reason I'm saying we are discussing the cash quadrant is that everyone, I think is also because I'm also of a book. I'm sure a lot of the guys in the group, they do read. You know, they love reading books. If you know, if you don't actually enjoy reading books, I recommend you start, you know, books. You know, I do recommend that you start reading books. If you are reading, what you can do is you can listen to audio ebooks. Okay, that's something to look into because it's very much helpful. The reason I recommend books is mainly you are learning of someone who's actually doing it, you know, who's making money, who's actually progressing. If you want to be a millionaire, you'll be learning from the other millionaire that is actually wrote a book. So which make everything easy for you. Okay. And if you're reading a book, millionaire, you're actually learning, you know, proceeds, you know, into their thoughts, their mindset. Because back in the days, you know, sometimes you not have access to a billionaire, but if you're reading their book, you actually have access, you know, because they're reading with they'll be sharing their knowledge, their experience, you know, even the steps in terms of how to accomplish what you're really looking into accomplish. I don't know why. The picture is just acting up on me. I'm trying to load it. Trying to load. Yeah, I'm trying to load the picture. That's not this picture. Okay, just try and load this. Load this. Okay. So I'm trying to load. You remember the picture on the WhatsApp, the one that's on the cash flow quantity. So I'm trying to load that picture. It's just acting up on me now. You know. It's funny because I was at it. Okay. Because I want to discuss few things before we dive deep into the. Firstly, it's going to be the entry signal. When I discuss how do you enter into a trade, okay? The entry part much important because uh, if you've done your analysis and you do not enter, it means you're not gonna make any money, okay? And if you are scared, because it happens sometimes that maybe you've been on some losing trade, now you are so much afraid of placing a buy or a sell, okay? So that can also happen because you are now got that fear because you've been opening trades and losing. So now you are scared to play some trade. Sometimes it can happen that you've been on the winning stream, which means you've been placing trade and making profit. So hence your confidence is very high in such a way that you're just placing trade without even following through, you know, the proper risk management plan, because that can also happen. You know, yes, you've got high confidence that you don't even feel like you don't actually need to. Okay, I think I now got the picture. That you feel like, you know what, I'm a master in this thing. I don't need to do any of this thing, what you call risk management, because I've got it, you know, I've got it. But, you know, yeah. Can everyone see the cash flow quadrant on my screen? Just want to confirm that before we go on and talk about it. Can everyone see the cash flow quadrant? I want to know. Just type in the chat box if you can see it, so I can just continue speaking about it. I don't want to, you know, okay, one is saying yes, perfect, perfect. All right, okay, good. Okay, the reason I want to talk about this is because I wanted us to understand that as a trader, number one, okay, someone's saying yes. Okay, perfect. Thank you guys for lovely, lovely. No saying yes. Okay. So, a cash flow quadrant is mainly adopted from the book by Robert Kiyosaki, where he talks about his rich dad and poor dad. The rich dad obviously was advising him to be a business owner and to be an investor. Okay. And also, while his poor dad was very much highly educated, but I was advising him to become, to be so much educated that he can get a very high job, become an employee, meaning he's gonna, when you're so much educated, obviously with a better qualification and experience, you're more likely to get a good high paying job. With a good high paying job, which means you can afford a house, you can afford to have a house, you can afford to have property, you can afford to buy a car, get a medical aid. So you're basically looking to make sure you are secured. Financial security is very much important. That was the key, which was advice from him, given to him by the poor dad. But what is important is that this is advice that a lot of us have been receiving, especially from our parents. It's advice given to us by society. And then we talk about a self-employed person. It's someone who's very much active. They have to work for their money, and it's someone who's a this person is basically like a specialist, someone who's working for themselves, like a surgery, someone who's owning a practice, someone who's a plumber, all those people. Okay, so it's someone who's like, you know what, I'm owning my time, but I'm owning the job. If I don't show up at work or in my business, I cannot get an income by month end. Okay, so the reason I'm speaking about this is because it's going to be the focus on, and then obviously the another quadrant on this side, which is the business owner, B's and I's. These are your business owner, where income does not depend on active work, where you've got employees or you've got a team or you've got a system that is giving you an income. Okay. So what is important, if you're a business owner and you're starting off in business, it's very much important that you start building up a team. You know, a team is your asset into making sure that you don't necessarily be much needed in your business, and then so that your income does not depend on you doing certain things or being active. And then if you're an investor, income does not depend on being active in your work, whereby you've got your money that is giving you more money. You basically have money working hard for you. A lot of us, we work very hard for our money. We wake up every day to work hard for our money. But what we want our money working hard for us. Okay. As an investor, it's very much important, number one, to have education. Okay, that's very key. Very much to have education. Just write that down. Education. Yeah. First thing, always have education. Secondly, you must have experience. Education. What is education? Educate yourself about different type of assets. Different types of asset class. You must know. Education. So education on assets. Okay. So as an investor, is also understand that when you invest, you're investing in the business. If you do not understand the principles that make a business profitable, in terms of who is the CEO of the company, who's the director of the company, what are the products, what are the services, what is the technology in that sector, what is the income statement of that company, what are the potential smart doing like a SWOT analysis, check about the competition, the risk, the reward, the competition, all of those things. If you can't do SWOT analysis, if you don't understand the business, it's gonna be very hard for you. All right, okay, no problem, no problem. So educate in terms of assets, and then another thing, obviously, you should have experience. Okay, it doesn't really help for you to have education, but you do not apply the knowledge that you are learning. So have education and then experience, which means what is experience? Have experience what it's like to buying a share of a company. Have experience what it's like to have a trading account and funding that account, even if it's just a small account. Fund your small account, grow it using the signal that we're sharing on the group, and by experience you'll be able to improve. Sometimes a lot of people, it's been said, most business owners have been told, get started, get started. you know it's very much important, because as soon as you get started, start funding your trading account. Start funding your stock market account, start buying those shares. Even if then you can monitor your progress. If without getting started, you will not be able to monitor anything, because you've got nothing to monitor. So have experience. Have experience. That is why even when you go look for a job, especially not the starting out, if you're going to be in the management position, they ask you do you have experience in this you're doing, experience will give you what I call a proof of a concept. The proof of a concept means you've got an idea and you've tried out, you can see that it's working, and now you can expand it into a much bigger, which means you invested, let's say, about 1,000 rand on your trading account, and you've been trading, you've been growing your account, you can see profits. Now you can top up your trading account. You can get more money into your trading account. Maybe you've also bought some shares, or you've bought a little bit of a property. Maybe you've put down a deposit of, let's say, 50K on the apartment or property, and now you're seeing progress in maybe you've seen maybe a rental income. Now you can go to the bank because it's been proven maybe over a year or 6 months. You can see now, I can see results, experience. With that experience, you can improve. Maybe you're in a certain business, you've seen growth, you've seen progress in your business. Because you've seen growth, you've got experience, now you can improve. And now you can learn other things that can help you in terms of leverage, which means whatever amount you have, how to leverage that amount to do more. Okay. And then obviously the last thing that you definitely need is going to be excess cash. Okay. Which is what we are pushing when we're talking about being financially free. Being financially free, it needs you to understand that number one, you will have the time and you will have the money. Okay. Being financially free, which means also whatever idea that you have, you are not limited by money. Okay. A lot of people that actually have jobs, you find that they can have the money, but they do not have the time. Okay, which is basically most of them is a problem. Okay, what you want to be on, you want to be on this side. Which side is that? Is the side whereby you are a business owner or you are an investor. Okay, obviously, a lot of people cannot be business owners, but everyone can be an investor. An investor, that is where you've got your money working for you. Because sometimes it can be a bit of a problem, to be able to manage a business while you are working. But you can have your money working for you. Have your money in a trading account. That's the first step, obviously, within this group. And then obviously you can push your money into other asset class like investing into other people businesses, whereby you're not active on the business, but you invested money in that business. When that business make profits, they give you a share of your profits as a shareholder. And then other thing you can do, obviously, as an investor, you can buy property, you can buy shares, you can buy crypto. We'll talk about this some other time, okay? But what I want to share tonight is that the cash flow quadrant is very important for you to understand. It's very much important. If you've got a job right now, you are working, or you are self-employed right now, make sure that you are pushing that a lot, okay? But as much as you are pushing that in your job, or you're pushing that as you're self-employed, focus on the side, focus on making sure your investments are growing, which means your trading account, your funds in your trading accounts are growing. If you've got a business, focus on building a team within your business so that sometimes you will not be needed in your business. It's like almost like if you're an Uber driver, hire another person to become a driver. At least you with their time as they're working, you get a share profit of that money. And then whatever share you are getting from that Uber driver or that motorcycle, that property, you put that into your investment column. You adding on your investment. That profit, you adding on your investment. And then after some time, you discover that your investment now can actually cover your monthly bills. Okay. Once your investment can cover your monthly bills, that is where you are actually owning your time. What you want to do, you want to own your time. But that is going to happen as you are consistent in terms of making that investment. So you can take maybe a portion, 20%, 10%. Remember, this session is mainly, it's not a financial advice session. It's for education purposes. Okay. All right. If you understand the four quadrant, you can type yes on the chat box, and then we can go through to talk about the setup. I think this is the thing, the technical side of it. Okay. The entry signal, that's going to be the first step where we're going to dive deep into tonight. If you understand, if you've got any question regarding the cash flow quadrant, You can also ask on the chat box if you feel like it's gonna take some time. You can feel free to ask me on the WhatsApp number. Okay, you can WhatsApp me, send me a voice note, and then we can talk about it maybe via WhatsApp, and we can also talk about maybe even via phone call. I really don't mind. Okay, but if for now you're good, most definitely if you're good. But yeah. Oh, Lulama is just joining us now. Oh, okay. But but just I think this is I think I think a lot of us they understand this. But if you've gotten a question on this, please feel free to ask. But this is just understanding the mindset, okay? So if you are currently working, make sure you're putting 100% in your job, but the income you're getting there, your salary, your wages, you're putting a portion of your wages towards funding your trading account, towards your investment column, or maybe towards a business you want to run on the side. Okay. But for the purpose of our session, as we talk about trading, put aside some money to growing a trading account, because 10% of a thousand of a 10,000 rand account, it's about 1,000 rand. But a 10% of 100,000 rand trading account is about 10K, you know, 10,000 rand. If you can do 10% every week of 100K account, you can make 40K. With 40K, you can do a lot for yourself, for your family, for your community. Obviously, as you grow in your account, that 10% will surely grow. Okay. The reason I'm saying this is because I want to make sure that you understand that this column, most of the time, if you are working, this column, chances are if you are in this column, you will have a lot of time. You with your time that you are working there, you'll definitely be getting paid. But now, if you do not have money working for you, you will always be required to have a job for you to have an income. So you must make sure you grow your investor column. If you are self-employed, always make sure that as much as you're working and you're getting that income, as a specialist, as an Uber driver, sometimes as a dentist, as a doctor, as an engineer, you've got your own practice, you're a business owner, but a small business, you need to be there to be active in your business for you to make money. You need to build a team in your business so that you will not be needed for daily operation of your business. That's how you're going to set yourself free to have the time and have the money. As an investor, obviously, education is very important, different class of assets, from properties to shares, all of that. We talk about this on another session. And then obviously have experience. Once you've learned something, make sure you put in the work. Practice, buy that crypto, buy that property, buy that share, find your trading account, get yourself banked, have experience, and then obviously you'll have excess cash, okay? Perhaps maybe it's a problem with the network, I'm not sure. Okay. Yeah, I think, yeah. And then the first step, obviously, we much going to talk about in terms of a trading plan is your entry signal. Because we said tonight, we're going to be talking about the mindset, and also we're going to be talking about in terms of being technical, the how part. We did speak about the why in the first session, but now we are going to talk about the how part, which is technical part of a trading plan. Okay. The technical part of a trading plan is very much important because it's talk about your skill as a trader. Okay, your skill as a trader, it's important to understand. You've got your technical skill, you've got your mental skill, you also got what I call understanding calculation of risk. Okay, so let's just do this. I think the first thing is entry. Okay, so firstly, you must understand what is a setup, okay? So what is a setup? So a lot of people, if like, we're looking for a setup, that's what you look for. If you are analyzing, you are definitely looking for a setup. Okay? If the setup is not there, a setup is one of the movement of the price that can be, obviously you can see whether you are using MT4, you are using a C trader, or you are using TradeView. So those are some of the platform you use to analyze, okay? A setup can also be a signal for a market direction. So when you say a setup, you're talking about you want to buy or you want to sell. There's a setup, there's a way that the market is moving, or the price, the way the price is moving, that are showing you that, you know what, this is a buy or a sell. Okay, so a setup, it gives us confidence for entry, because every entry in trading is risky. Okay, a setup must be considered in trading. It's a high, remember, trading is high risk. So basically, you're always going to look for a high probability setup. So there are many configuration we can use for entry in this, obviously, but obviously you can focus on the Quasimodo setup, a fake out setup, and bullish and bearish engulfing setup. Okay, so these are some of the setups you can look into. Okay, this is QML, this is fake out. So a setup is the way the price is moving. Okay, so this is where support become resistance. This may be a bit, a bit of an advance for some of the guys that are joining us tonight. But, I think you will learn. Then this is a sub zone setup. So a sub zone is where you've got this zone, which was demand, now becoming a supply. Okay. So which means it's almost like, if you're buying something now because you've bought a lot of it, you can actually sell, leftovers, And then this is a flag limit, and that's a diamond. Okay, let's just go there. Let's go down. Let's do this. Okay. Okay, let's just go over the charts to make it simple. Okay, let's just go over the charts because that will make a little bit more sense. Okay. So a setup is the way price has been moving. Okay, for example, okay, you've got this here. Let me just switch this to a line chart. Okay. So what do you have here? You've got this price. It has moved towards that level. Okay. So this price, it has moved to, okay, let me just remove everything from here. A setup is the way the price has been moving. So when you see a setup, okay, there's a question. Taking off income, so clear that everyone here. Okay. All right. Okay. Okay. Perfect. Oh, all right. Okay. 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 We can do that. All right. So for example, this is what? This is gold. Okay. Gold, a setup is this. It's the way the price has moved. So this is a low, and then the market move. And from here, what happens? It got to that high. Okay, so it made a pullback. Okay, pullback towards previous. You can see here. So a price, this here was another level of, just marking this as some sort of a level, which was a demand level. We can also call it, for example, this here is, let's just write it, kanji. Let's say this is R1. Okay, resistance like a ceiling. The highest point where the price is reaching is now just like testing. So the price broke through that level, just call this R2. Okay, so now you've got this, right? The price broke above. For the make further, the price broke above and is coming back here. And obviously at that level, as if the price is breaking. So for example here, we call this, if a price, looking at the price action, break, whether it's above or it's below, and close. So breaking above and closing above a level. Okay, as you can see here, the price broke above. Oh, okay, I need to change this. Other color. Okay, so the price broke above this level and it left this candle. Let's just zoom in on that candle. Left this candle. This candle is our signal for our next. So when the price broke above and it's coming back, this level here, this candle is our signal that we're gonna buy when the price gets to this level. So when the above come back, this is where we're looking to buy. Okay, so this candle remember there's something called confluence. Okay, I'm gonna write it here. So confluence, you can Google that word, confluence of signals, or should I say triggers. Okay, confluence of triggers is something like this, just to make it a bit. It's like, you know, when the people are predicting the weather, they look at the clouds, look at the wind, so they look at the days and the weeks, and also what season are we on. So these are the things they look for. Okay, it's like these things are confirming that the market is gonna move in that direction. Yeah, confluence. Yeah, confluence. Yes, confluence. It's just things that are confirming that this is a buy. Okay, so first thing, obviously, the price broke above this level and it went there. This is bullish candle, big bullish candle, close above, giving out this candle, bullish candle, bullish candle, bullish candle, and then this here is basically confirming with that double marrow over there on the side, and then it gave us this shooting star or inverted hammer, and then the price made a pullback. This pullback, number one, this pulling back, or we can call it some form of compression. It means number one is taking profits from this movement, which was your buy. Okay, this bullish movement, and then we did this pulling back in the form of compression. So building up, and then you've got another bullish movement over here. Okay. So number one, because confluence is confirmation that I can say. First thing we saw this, the market broke above first signal or first trigger broke above this level. Number two, the market is coming back here as in the form of a compression. That's another thing. Let's write it down. Firstly, we say we've got a bullish candle on demand zone. Okay, that's the first thing we see. Secondly, we see that the market is doing what? There is a pullback, which is in compression, or let's just say compression. Okay, so this pullback, yeah. So this pullback is not aggressive as this move. So this was aggressive from 1, 2, 3, 4, aggressive, and then the pullback. So this pullback, it shows like a take profits, and this pullback is coming back here, and then right where we've got our bullish candle, you can see there's another doji. So a doji is what? So we see a candlestick pattern. Okay, that's another a candlestick pattern. So in this case, it's a doji, which signifies what? A reversal, which means a reversal of what? A reversal of this price as it was moving. It was moving up and now it is dropping. So we got a reversal here from 1, 2, 3 drop. Remember, there's a reason why they're doing this 1, 2, 3. A lot of people will convince that this market is actually going down, so they enter the sell. But this sell is in line with that market as it break above and close above this level. And now you've got this here, compression pulling back. That pullback is in the form of what? Compression. Compression meaning it's not as aggressive as this move. It's also trapping both ways, buyers and sellers, because some people are actually trading this thing as a channel. So they are actually buying and selling at the same time. So trapping both ways, okay? So now when the price come back to this level from that candle, from this candle, right? It's coming back here. You can see that's basically where you normally will enter your buy. And then obviously if you took your buy, that means you've got that so many, how many pips from here? That level 1912 up to as close to 200 pips. That's a lot of pips. So if you're trading with 0.1, you definitely have made $200. Okay. So we'll talk about this in our next session. So which means if you're trading with 0.1 on the USD account, this is equal to $200. So $200 is roughly about I think now it's 4,000 rand. Okay.